Texas used to be the cheap state, but in 2026, some cities are more expensive than California. That sounds impossible. And that's exactly why people keep getting blindsided. Texas still sells the same dream it always has. No state income tax, bigger houses, lower prices, more space, more freedom. From a distance, it still looks like the smartest move in America. But once people get there, the math starts changing. Fast. Property taxes, insurance, utilities, tolls, HOA fees, car dependence. Suddenly, the cheap move doesn't feel cheap at all. And in some parts of Texas, the total monthly cost is now close enough to coastal cities that the old bargain story starts breaking down. That's the trap. Texas still looks affordable at first glance. A house in Houston or Dallas can look like a steal next to Los Angeles or San Jose. And if you stop at the listing price, the decision feels easy. Bigger house. Lower sticker price. End of story. Buyers do this. Renters do it too. They see lower rent than New York or San Francisco and assume they found the hack. But Texas doesn't hit your wallet in the same place as California. It hits from more directions, and most people don't realize that until they're already committed. That is the real story of living in Texas in 2026. Not that every city is overpriced, and not that California suddenly became cheap. The real story is simpler and more dangerous. In Texas, the visible costs can still look reasonable, while the hidden costs rise fast enough to erase the advantage people thought they were getting. In some cities, and for some households, that advantage has shrunk so much that the old Texas affordability story barely works anymore. Most people still arrive with the same expectation. Texas means low cost of living. And to be fair, that idea came from something real. For years, Texas built its reputation as the place people moved when the coasts got too expensive. Land was cheaper, housing expanded faster, major metros added jobs. Families could still imagine buying a home with a yard. Compared to the crushing costs of many coastal cities, Texas felt like an escape hatch, and for a while, it was. If you moved from the Bay Area to Austin in the 2000s, or from Los Angeles to Dallas 10 years ago, the savings could be dramatic. Even after moving costs and trade-offs, plenty of people genuinely came out ahead. That memory still shapes how people talk about Texas now. But that's the problem. They're using an old map to understand a new state. Because in 2026, the first thing that breaks the old story is this. Texas affordability now depends heavily on where you live, how you live, and what kind of housing you need. A remote worker with a high salary living outside San Antonio may still feel like they found a deal, but a middle-income family trying to buy near jobs in Austin or rent in a desirable part of Dallas may discover that Texas no longer feels cheap at all. The averages still sound comforting. The pressure points tell the truth. Austin is the clearest example. It built its brand as a fun, creative, relatively affordable alternative to the coasts. But once demand exploded, that identity got expensive fast. Housing costs surged. More luxury supply helped at the top. But the broader cost of daily life rose too. Childcare, parking, restaurants, services, entertainment, even basic errands started costing more. The city that once felt like a cheaper version of California started copying parts of California's price experience without copying the transit or the gentler utility bills. And Austin is not the only one. Dallas is a perfect example of expensive convenience. The metro is massive, attractive, and full of jobs, but the total cost of functioning in Dallas can be brutal. You may save on state income tax, then lose ground to property taxes, insurance, commuting, and the simple fact that life there usually requires constant driving. Houston can still offer lower housing in some areas, but flood risk changes the equation. That doesn't just affect peace of mind. It affects insurance, location choices, and the real cost of owning a home. Even cities that still look cheap on paper can become expensive the moment you ask the question that actually matters. What does it cost to live well there, month after month? This is where the contradiction really hits. People compare Texas to California using home prices. But home price is only the first layer of the bill. What changes your life is the monthly cost of ownership. And in Texas, that number can rise much faster than people expect, because property taxes are not some minor detail. In many cases, they are the twist. A buyer may find a home that is much cheaper than the California version. Great. But then the annual property tax bill shows up, and the monthly payment swells. Not by a little, by enough to completely change whether the house still feels like a bargain. In some areas, a lower-priced Texas home can produce a monthly cost surprisingly close to a more expensive home somewhere else. That's why the old comparison keeps failing. People compare price to price when they should be comparing burden to burden. Then insurance shows up, and the story gets worse. Home insurance in Texas has become one of the biggest shocks for newcomers. Near the coast, that makes obvious sense. But even inland, hail, wind, severe storms, higher claim costs, and rising rebuilding costs have pushed premiums up. Auto insurance is another quiet punch to the face. Texas is a driving state, and insurers price it like one. Long commutes, heavy traffic, weather damage, repair costs, theft patterns, all of it feeds into a bill many people underestimate before they move. Then summer arrives, and the next hidden cost kicks the door open. So utilities. Texas heat is not just uncomfortable, it is expensive. Cooling a larger home through long, brutal summers can make your electric bill feel like a second rent payment. And that connects to another illusion people love. Bigger homes sound like value, but bigger homes also mean more roof, more walls, more square footage to cool, more maintenance, more repairs, and more exposure to weather. The fantasy is, I can get twice the house. The reality is, you also have to pay to run twice the house. That's the shift people don't see coming. Texas doesn't always get expensive because one bill is insane. It gets expensive because the state has a way of stacking medium to large bills on top of each other until the total feels absurd. The house is cheaper. Fine. But taxes are higher. Insurance is higher. Utilities are higher. And driving is non-negotiable. Tolls keep piling up. HOA dues feel small until they don't. Each cost sounds manageable on its own. Together, they can erase the savings people thought they were getting. And that leads to the biggest misunderstanding of all, the no income tax myth. People hear no state income tax and instantly label Texas as low tax, but states still need revenue. Texas just collects it differently, through property taxes, sales taxes, fees, local cost structures. And those hit different households in very different ways. If you're a high earner with flexibility, limited property exposure, and the ability to choose your location carefully, Texas can still be tax efficient. But if you're buying a home, raising kids, spending heavily on taxable goods and services, and depending on local infrastructure, and the savings can disappear fast, that matters because people don't live inside tax theory. They live inside monthly cash flow. Can I cover the bills without stress? Can I save money? Can I absorb one bad surprise? Can I still breathe after insurance renews, summer utilities spike, and property taxes hit? In 2026, Texas increasingly rewards households that can absorb recurring friction. And that is a very different promise from Texas is cheap. There's also a deeper reason this happened. Texas succeeded. That sounds backwards, but success is part of the cost problem. The state attracted companies, workers, investors, and developers at scale. Population growth drove up demand. Desirable neighborhoods became premium products. Infrastructure struggled to keep pace. Insurance systems took on more stress. Roads got fuller. And services got pricier. More growth created more construction, But it also created more competition for land, labor, and everyday life. In a strange way, Texas helped price itself up by winning. And once a place becomes famous for being affordable, that reputation can survive long after the numbers change. Reputation lags reality. Texas is still cashing in on an image built in a cheaper era. That lag is powerful. It keeps relocation content simple. It keeps outdated assumptions alive. It keeps people moving in with old math. And it hides the one detail that matters most. Affordability is not a slogan. It's a household equation. That equation gets even worse when you factor in time. Long commutes in Texas are often treated like a lifestyle choice, but they function like a tax. A cheaper home farther out may bring more gas costs, and more car wear, more tolls, more time lost, and a lower daily quality of life. Parents feel it. Couples feel it. Even remote workers feel it when more space starts turning into distance, isolation, and more errands that require a car. A house can be technically affordable and still become financially draining, emotionally draining, and hard to escape. That's why some Texas cities can feel more expensive than California in a way that sounds crazy until you define what expensive actually means. If expensive means pure sticker price, then no, Texas is not suddenly Beverly Hills. But if expensive means the full cost of building a stable, comfortable life in a desirable area, with all the recurring bills included, the gap gets much smaller than people expect. And in some cases, the Texas version feels worse, and because the costs are more fragmented, less visible up front, and harder to escape once you've committed. That hidden truth is the real cost of living in Texas in 2026. It's not just about paying more. It's about paying in places people were never trained to examine. The old affordability story taught people to focus on home prices and income tax. The new reality requires a much harsher checklist. What are the property taxes, really? What is the actual insurance quote, not the online estimate? How ugly do the summer utility bills get? How many cars does this lifestyle require? How much are toll roads going to cost every month? What happens if your area floods, hails, or gets hammered by a storm? And after all of that, what are you actually saving? That changes who wins in Texas now. The winners are not simply the people who move there. They're the people who understand the system before they move. The people who run the real monthly math. The people who choose neighborhoods, not just metros. The people who understand that a lower listing price can hide a higher carrying cost. The people who stop chasing the old Texas dream and start evaluating the new Texas reality. Because the future of affordability in Texas is not one story. It's a split screen. There will still be pockets of value. There will still be households that come out ahead. There will still be incomes and industries that make the move worth it. But the era of Texas as an automatic bargain is over. And the people still repeating that story are usually selling the fantasy, not living the bill. So when someone says Texas is cheap, the real question is, cheap for who? Cheap compared to what? Cheap on paper? Or cheap after 12 months of real life? That's the payoff hidden inside the hook. Texas used to be the cheap state. In 2026, that label can still look true from a distance. But up close, in the cities and suburbs where people are actually trying to build a life, the math looks very different. Not because Texas became California, but because the old story stopped counting the real costs. And once you count everything, the surprise is not that some parts of Texas feel expensive. The surprise is how long people kept pretending they didn't.